So how do you find
Yep, I'm right there, brother.
Okay. Somebody sit next to you? No, it's all you. Yeah, he just picked that one. Standards and metrics we use across that.
Okay, hey everybody, welcome to this month's San Francisco Bitcoin Meetup event. If we can all settle in, we're going to go ahead and get started. So before I get into it, we do something here where we, at the very beginning of the event, we like to take a moment for a couple lightning talks. It's just people who stop by about really interesting projects, they want to share them, like a minute, 30 seconds each. So first off, I wanted to welcome up Aaron. Big round of applause, please.
Thanks, Travis. Many of you probably have seen my face around here. I've been around for a year and a half or so with this particular meetup. I'm one of the partners that owns Spooky's Club Modern. We're a bar at Bush and Taylor Street, and we're the only bar in San Francisco that takes Bitcoin. So the good news is that we're planning on taking Ethereum and Litecoin too. So we're maybe others.
If you show up,
talk to me.
buy enough drinks, they'll do it.
So anyways, every once a month we do a Bitcoin meetup. It's a Wednesday, third Wednesday of the month. It's at 6:30 p.m. till 10. And so everyone from this community and anywhere is welcome to come and talk about cryptocurrency. But as a public service announcement from my bartenders, just remember to tip the bartenders. Thank you very much.
Thanks, Aaron.
Thanks, Travis. So my name is Koji. I'm visiting this area from Japan for this week. We're doing a blockchain incubation center out of Tokyo called HashHub. But we also help foreign quality projects with actual products market their project in Japan as well. So if you're interested in the Japanese market, after this event, just please come talk to me. There's a lot of misconceptions about regulation in Japan, and but there's a lot of interesting opportunities there. So if you have a good product, we would love to help. Also, I'm selling T-shirts as my hobby project. This is a Silk Road T-shirt.
want one.
Yeah, made in San Francisco. You can actually buy it already. So if you're interested, just let me know.
What's the link?
It's called Memory Chain. Maybe I'll just post the link on the meetup.
It'll be in the comments section.
Right, right, yeah.
Cool.
Okay, thanks.
Thanks, Travis. My name is Rostin. I'm the head of marketing for BToken. What we are is a home sharing platform that's built on the blockchain. We're on the Ethereum network, so it's kind of like an Airbnb competitor, and you can pay with our own token. It's a BToken, or ETH or fiat pretty soon. But right now it's just our own token. What we're trying to do is get hosts right now. We're based in San Francisco. We've got properties in Los Angeles as well. So if you go to our website, bnest.com, and there's a host interest form, if you type in B-E-E, we'll give you an extra $50 on your first booking. We're also hiring pretty much everything. So my name is, you can email me at rostin@btoken.com or find us on AngelList. And then we've got free t-shirts over there as well, so help yourself. And if you want our token, we're listed on CoinMarketCap, so you can check it out. It's BEE. Thanks.
And then Alex, please.
Thanks, Travis. My name is Alex, and we do crypto gaming concept meetups like this Friday. So anyone's here with a game development background? No one? Oh, awesome. Awesome. Anyone does like 3D content creation, like 3D graphics? Fantastic. Yeah, we'll tell you everything how to bring it on the blockchain. Please come on Friday, crypto gaming concept happy hour. We'll have drinks and garage game. We'll be cool. Thank you.
And then last up, a word from San Francisco Ethereum Development Meetup.
How's it going, everyone? I'm one of the co-organizers of the SF Ethereum Developers Meetup. Check us out on meetup.com. We have a meetup tomorrow with Foam at Starfish Mission. You guys should come out.
All right, Jake, you want to start getting set up? So today, the meetup event, it's what the coin, and the idea here is there's tons of different coins. You go on CoinMarketCap, there's thousands of projects, there's new ICOs all the time. And a common question that I get from people new to the space is, how do I tell the difference between all of these projects? Is there any kind of common metrics, analysis, best practices? So that's what we decided to talk about today. And Jay and Brian are both going to be covering it with their respective projects. And I expect them to completely solve the problem today. But I'll settle for some good start on the conversation. So please, warm round of applause for Brian. Or Jay.
Hey everybody, it's great to be here. I love seeing the community behind cryptocurrency just growing every year. I recently attended a cryptocurrency convention here in San Francisco, and about halfway through the convention they were shutting it down because the fire marshal was complaining that they had over-attendance, and so they wouldn't let anybody in the auditorium. They were booting people out, and there was a lot of confusion. But that was not the case in 2013 when I first got into cryptocurrency. It was kind of like, I'm into cryptocurrency or Bitcoin, and it's like, what is that? So I love seeing the growth. I love that you guys attended tonight. Thanks for having me. I'm glad to be here. So a little bit about myself. So I got into Bitcoin back in 2013. Before that, I was a hardcore gamer. I was chess club president in college. I loved playing all kinds of video games. I played StarCraft in Korea, and I just wanted to pursue my video game passion. And so in 2006, I started chess.com, and I thought I could make a living doing chess against the better advice of everybody who told me there's no money in chess. And for the most part, they're right. But if you're the best site on the internet, you actually can make a little bit of money. So I did chess.com for about 10 years as the CTO there. And in 2013, I got the crypto craze from a couple of old high school friends of mine who were like, you've got to check out this Bitcoin thing. It's going to take the world by storm. And so I started dabbling in hobby projects. The first one I tried was gambling.com. We were a Bitcoin betting site. You could play Monopoly, you could play backgammon for cryptocurrency. And I still remember people playing backgammon for 1 Bitcoin per game. And now I'm looking back, I'm like, wow, that's a really expensive backgammon game. And then anyway, so I did that for a couple years. I also was part of the founding team on Cointerra doing Bitcoin mining. So we were doing a bunch of ASIC fab and stuff like that, and quickly realized how competitive that space was. as China got involved and other countries got involved, and they had lower electricity costs and all that. So I did that for a short stint, but it was a nice introduction to understand the proof of work that goes into Bitcoin. And then finally, about 3 months ago, I was still at chess.com, and I decided, you know what, I want to do cryptocurrency full time. And so I left chess.com and decided to start up Renzi. And so today I want to share with you kind of the motivations behind it and how it might help you guys as you're interested in cryptocurrency kind of navigate the space. So here we go. Little story is once upon a time, investing in cryptocurrency was very, very easy. Okay, so back in 2013, I would give cash to my friend. He would go meet somebody in some random location, and they do this kind of local swap. And then my friend would like send me some Bitcoins, and I'm like, sweet, that was really cool. And then I'm like, what do I do with these things? And everybody's like, you just hodl them. I'm like, okay. And so there wasn't a lot of technology back in 2013. There wasn't a lot of exchanges. Maybe Trade Hill, maybe Mt. Gox, neither which is around today. But it was very, very easy to be a cryptocurrency enthusiast in 2013 because there was really one choice, Bitcoin, and kind of Ripple in the background, but basically Bitcoin. As time went on, the technology made investing in cryptocurrency a little bit easier. So Bitstamp, Trade Hill, Mt. Gox, Coinbase came along, and you didn't have to go to local meetups anymore to buy and trade these Bitcoins. Zappo came along, BTCE, I don't know if you guys remember that exchange. I lost some money on that one. And then all of a sudden, it was still only Bitcoin with all these technologies. And then Trade Hill kind of went out of business, Mt. Gox went out of business, BTCE got raided by the feds. I've sent many emails to the feds, and they won't give me my money back. It's just gone. So anyway, be careful about exchanges. Then this kind of happened. This is the price of Bitcoin in 2017, and this led to an explosion in coins, right? So all of a sudden it was Bitcoin, and then Ripple, and then Litecoin came along. And then before you knew it, you looked up and there was like hundreds, if not thousands, of cryptocurrencies to choose from. My opinion at the time was still, don't bother with the altcoins. Bitcoin is really the only one that matters. Then in 2017, rise of the altcoins. The Bitcoin network got slow and expensive. Ethereum had a lot of success with their dApps and ICOs and really was a game changer for the applications of the blockchain. Bitcoin hard forked more than once. It was actually nice if you owned some Bitcoin back then. You're like, whoa, I just got Bitcoin Cash, and it's like free money overnight. So it's actually kind of nice, but long term, I think it's detrimental to Bitcoin. I'll talk about that a little bit. Bitcoin lost market share to cheaper, faster coins as it got slower and more expensive to use. Faith in Bitcoin kind of started to decline as they had inner struggles with the development team. They couldn't decide, between SegWit and bigger block sizes what to do. So there were a lot of disputes there. And as an investor, it's never good when you're looking at the core team and seeing these disputes. You're seeing developers leave. You're seeing developers sell all their Bitcoin. It doesn't put a really warm, fuzzy feeling inside. And then all of a sudden, like I said, Ethereum kind of beat Bitcoin to the first real blockchain killer app, which was ICOs. The ability to raise funds was a real game changer. So this bottom line here, I might get some woes, some disagreements, but me personally, I feel like Bitcoin's reign is coming to an end. And you see that here in this slide. This is the market share of Bitcoin. So the orange represents Bitcoin. And you can see this chart is from 2013 to today, and you can pretty much draw, a declining line of Bitcoin's market share with respect to the rest of the cryptocurrency market. And I think this will continue to decline. So where does that leave us as cryptocurrency enthusiasts? Where once upon a time it was easy, right? You just bought Bitcoin as a believer. I would have much loved it if the scenario played out that Bitcoin solved all the speed issues, solved the governance problems, solved the fee issues, and I could just hold on Bitcoin knowing that Bitcoin is going to change the world one day. But the realization came about that, I don't think that's going to happen. I think other coins are figuring out how to solve these problems faster than Bitcoin is. They're smaller teams, they're more nimble. So there was a realization to me that I needed to diversify my cryptocurrency portfolio. And how do I go about doing that? So this is where the idea of Renzi was born. The first step in trying to figure out which altcoins to invest in from a personal standpoint was, can I define what a perfect cryptocurrency would be? That's the cryptocurrency that I want in my portfolio. So a perfect cryptocurrency would have these traits, these attributes. They would be instant transfers. There would be no fees. They would be easy to store, send, and receive. The wallets would be very, very simple to understand. You wouldn't have to download the whole blockchain to run a wallet on your computer, right? You don't have to walk away for 30 minutes while you're installing. You would have an active and experienced involved dev team who's shown proven track record of success. You'd have an engaged and loyal community that loves the coin, that uses the coin. There'd be a clear strategy and a clear roadmap for that coin. There'd be massive industry adoption. They'd have partners, they'd have vendors, they'd have merchants, they'd have exchanges. It would be decentralized, and you'd have an immune network, and I'll talk about that a little bit later. You'd have proper governance structures set up so that the disputes could be solved without hard forking the coin. The reason why I think hard forking is so dangerous for coins, even though it seems like it's free cash in the short term for people who hold that coin, when you have a community behind a coin and all of a sudden it hard forks into Bitcoin and Bitcoin Cash, just as an example, you've just fractured your community into two different groups, and now people, as new investors come in, you almost feel like you have to choose one of these two horses that you want to bet on. Do you want to bet on Bitcoin Cash, or do you want to bet on Bitcoin? Do you buy both? They have different ideas about what's going to work in the long term. And so the idea behind market cap is if Bitcoin is worth, let's say, $300 billion today, and it hard forks, the idea is that the value of both of these hard forks combined would still be $300 billion. Not all of a sudden magically $500 billion. You can't just create value out of thin air overnight. So the competing hard forked coin is going to compete with the parent fork that it came from. And I think that this ultimately over time, if a coin hard forks enough, will dilute that coin and lower its overall value. So proper governance should avoid hard forks, in our opinion at Renzi. The other thing a coin should have is it should have a very clear history. It should have a clear history of how the airdrop happened or how the ICO happened, the initial kind of birth of the coins. It should be free of hacks, and the founder should have a clean track record, nothing kind of shady. And finally, we've got this category that we look at. What other features, proprietary features, does the coin have? Does it pay some sort of reward for voting? Does it have some sort of platform that other tokens can be built upon? So those are kind of like the perfect list of things that in our minds, a perfect cryptocurrency would have, and was the basis for our Renzi criteria. So I'm going to drill through these in a little bit more detail. Speed. This is one of the most important factors of any cryptocurrency, right? It's how fast does it take me? If I'm going to send coins from point A to point B, from wallet to wallet, somewhere from around the globe, how long does it take that transaction to confirm, to reach the other wallet? If it's taking upwards of 20, 30 minutes, it's not that efficient, and it's not going to be a great use case for people that are trying to use that cryptocurrency. So a lot of coins talk about max transactions per second as a way of measuring how large the bandwidth is of that particular coin. We actually think that transactions per second is a little misleading. It's not a very useful metric, mainly because only Ethereum and Bitcoin have reached capacity to where they, with CryptoKitties, Ethereum started reaching max transactions per second in their pipeline, and it affected everybody else's speed that was trying to use that blockchain. With Bitcoin, obviously, they've got a very low 7 transactions per second, and because of their massive adoption, it limits how fast you can send Bitcoins from one person to another. So we're trying to measure the number of seconds that it takes for coins to go from wallet A to wallet B, and we put that in a scoring chart and rate it accordingly. The second thing we look at is fees. How much does it cost to send coins from one wallet to another? And I ultimately think we've been so trained as users of money over the years that I can PayPal you, I can Venmo you, I can even do like an email transfer over to my bank account, and there's just zero fees. We've gotten very used to zero fees. We all know how to say on PayPal, okay, this is for friends and family, this is not service related, it's gonna go zero fees, right? So I ultimately think that cryptocurrencies, in order to be fully adopted, we'll have to figure out a way to put zero burden on the users who are sending it from point A to point B, and that transaction fee will have to be, the burden will be placed on somebody else, possibly the miners or possibly the people staking the coins. So we look at the average fee, regardless of the priority or the preference that you set, and we try to look at what is a micro transaction cost and what is a normal transaction cost. Third, we look at wallets. It's very basic. We look at how many platforms is that wallet supported on? Is there an API so that third parties can build wallets on top of that platform? Like I said before, SPV, don't make me download the whole blockchain to use your wallet. It's very painful. And then what proprietary features does that wallet support? Like I said, voting, are there built-in exchanges, etc. On the team side, the future of any cryptocurrency is based a lot on the guys that are behind the scenes building that coin. So we look at about 5 different factors on a team. We look at who the advisors are, what experience they have. We look at the actual number of commits, the lines added, number of contributors, and all 3 of these things come from GitHub. And I want to just comment on these 3 really quickly, is that there are some sites that do this already, like CryptoMiso is a site, very popular site that looks at GitHub activity to measure cryptocurrency. I noticed that when I was digging in and doing some research here, that I was looking, I think it was Dash, and I noticed that their #1 developer on the coin was actually like the core lead developer for Bitcoin. I'm like, that doesn't make any sense. He's not working on Dash. And it turns out that GitHub, when they do their analytics, they will include all the activity and commits of the parent fork the coin came from. So it's actually very, very misleading, a lot of these sites. When you look at activity, you're like, man, this coin's super active. I think I'm going to buy some of this stuff. And then you realize it's actually all of the activity from the parent fork, and the coin actually has almost no activity. You'll see this a lot on some masternode coins, some penny stocks, if you will. They may appear to be very active. We actually wrote some custom GitHub integration code that eliminates all the activity from the parent fork, so we get a true measure of how active the actual core team is. And of course, we look at the experience and qualifications of the developers and what we can find on them and what they've done in the past. The community behind a coin. So I found this picture of Vitalik Buterin and all his followers. But anyway, the success of any cryptocurrency obviously requires a loyal and involved community. Like you guys here, I'm sure you each have your favorite coin or your favorite top 5 coins that you're looking at or already invested in. You can be very involved in Discord or in Telegram chats. And ultimately, that is the core of any coin, right? Like if there's no community and nobody using the coin, there's no value in the coin. There's got to be people using it to actually store value or send and receive. So we look at how active the community is, how big the community is. We look at their Facebook following, their Twitter following, Reddit, chat rooms, and we also look at the roadmap to make sure that the core team is communicating with their community properly, what they're working on, when they're going to finish it, and are they hitting those milestones. Adoption. So this is an interesting one, right? Because you want to make sure that if I fork Bitcoin's code today, and I put together a pretty good team, I've got the same code that Bitcoin has, I've got a pretty good team. What do I not have that Bitcoin has? I don't have the adoption that they have, right? I don't have all of the partners within the industry. I don't have the market cap they have. I don't have the network that they've built out. So adoption tries to measure all of these things because we realize that adoption is just like community, is how many users are actually involved in the coin, what is its overall market cap, who are they working with in the industry. So adoption tries to measure how far along a coin is, and Bitcoin on our measuring scale is by far and away the most widely adopted cryptocurrency out there. Next we look at network. So this is probably our biggest work in progress score. Right now we've kind of done a lot of guesstimating on this based upon what we've been able to read and find on the different coin websites or in discussions with the core team members. We've got developers that are currently plugging away, trying to do more scientific kind of data approach to the network. This is one that I could actually talk about for a very long time, and I'm not going to because it gets kind of boring, but there's a great article that Balaji Srinivasan, who is the new CTO over at Coinbase, wrote called Quantifying Decentralization. And if you want to understand networks to a deeper degree, I would highly recommend you Google and read that article. It is pretty math heavy. He talks about what's called Gini coefficients, which essentially is the distribution of any one particular subsystem. So they use Gini coefficients for like wealth distribution in the United States, which actually has a very poor Gini score, right? Because the wealth distribution is so skewed towards the upper 1%. You could do the same with mining, with nodes by country, with clients and all these different things. So we're actually calculating the Gini coefficients for all the different coins to figure out where are the nodes distributed. Is it well dispersed around the globe, or is it concentrated within one country? We look at the mining rewards and try to figure out, is it well dispersed amongst all of the different people participating in the network, or are there a few miners that dominate the network? And this is very important because, as we've seen recently with Verge, which is actually more of a software bug, but you know, a 51% attack is probably the most dangerous thing for any one cryptocurrency, since the whole concept is around decentralization. So we look at all these factors and we score it. Governance, I'm almost done. I think we have 2 more categories. I'm trying to bore you guys here. This is my only serious picture in the entire slide. This is a real picture that actually means something. So I found this on Twitter by Seth Bannon, where he tries to explain what a DAO is, a decentralized autonomous organization, and how that works in kind of a virtuous cycle. You've got your DAO, which is ordering particular products that they want built on their blockchain. The contractors then build it, which then turns into a real product. Within the DAO, which are the users, then consume it and use it, right? So we kind of feel like at this point in time, a DAO is kind of like the pinnacle of cryptocurrency governance. Fred Airson wrote a fantastic article about cryptocurrency governance. Again, highly recommend that read. He talks about all the different forms of governance that are being tried and have yet to be tried, and the positives and negatives of each of those. Many cryptocurrencies out there do not have DAOs set up. All they have is a foundation, and some of them don't even have a foundation. All they have is a core team of officers that make decisions. So we look at all that, and kind of the closer the coin gets to a DAO, the higher their score is going to be. This is one that is going to require us to again dig in further and try and delineate that a lot more. Trust. It's very simple. It's just, is your team transparent? Or is it like Ninja One, you know, Programmer Gosu? I mean, some of these projects I look at, it's nothing but like cartoon avatars and fake names. So we want to know, like, who is the team that's working behind this, so we can actually do research and some due diligence around who are these guys and what experience do they have and know what they're doing. Is your code transparent? Is it available for us to just look at on GitHub? And then what is your history? And then as far as reporting, what types of reporting and metrics do you provide to the community? And then finally, the last category we look at, I spoke about it a little bit earlier, it's a bonus category. There are certain coins that are focused, like Monero is focused very much on privacy. So it's hard to score all coins on privacy because not all coins are focused on privacy. So Monero would get a bonus for that. Ethereum would get a bonus for its DApp capability. A couple other coins listed here, Decred and Arc, might get bonus points for having like a reward voting system built into their coin to incentivize users to stake their coins. And then you've got specific proprietary industry solution type coins like Sia Coin or Steam. You know, Steam has like a real world application being used behind its cryptocurrency, and we feel that deserves a bonus. So those are the 10 categories, and I'm going to quickly talk about what we're currently working on. We're experimenting with different weighting factors. So how do we weight these 10 different categories? What's worth more, speed or fees? What's worth more, governance or adoption? Right? Like, that's kind of a subjective question, but as a ratings company and and as an institution that people would look to for advice on what to invest in, we've got to be more opinionated about which of these categories actually hold more weight than others. We continue to do more digging and development on blockchain metrics. We feel that data is key in any kind of ratings agency. We want all of our ratings to be based on hard data and less subjective opinions. So we're trying to continue to gather more blockchain metrics. We're automating a lot of these scores, and then we're just working on adding more coins. So right now, Renzi scores about 25 different cryptocurrencies, and obviously there's a lot more to go. I put some quotes up here. I'm not going to read them all out, but you've got some very big names. John McAfee is debatable. But Eric Schmidt, Mark Andreessen, Peter Thiel, all pretty big believers in the blockchain. And then if you want to help or get involved with Renzi, come talk to me, or you can email me. Here's my email. And obviously I got into this because I'm a huge believer in cryptocurrency, and I feel that it's going to continue to change the world the way we live. So thank you very much.
Thank you, Brian, if you want to start getting set up. So next we're going to hear from Brian, and he's Project Canary Network. And then afterwards, if you have any questions, we're saving those to the end. We're going to do a joint Q&A. So both speakers will come back up, and I'll walk around with the microphone, just raise your hand, and you'll be able to ask your questions then. So please, welcome, Brian.
Hi. Hi, guys. Hi, I'm Brian of Canary Network, and the name, the story behind our name is there's a story about coal mines, and so coal mines would have these gas leaks, and then and because these gas leaks were completely odorless, miners would just suddenly die in them. But then one clever invention they came up with was they used to put these canaries in cages near the gold mines. So basically the canaries would die before the gas leak got too serious and would give miners enough time to get out. So basically the story behind our name is that before you guys do. So I'm Chief Project Officer at Canary Network. I've previously done basically economics on mechanism design and also crypto economics at UChicago, TGG Group, and Stellar. I've also been working in data science and trading. Used to work for horse statistics, by the way. And so glad to meet you guys. So the scope of my talk will be basically, so Canary Network is a research service for people looking to put money into early token offerings. So our difference from Renzi is that while Renzi seems to be looking more into larger and more established projects, we're more interested in identifying new projects that can see that have good potential in reaching good usage. And so basically, my job today is to convince you that putting money in early token offerings is not a terrible idea, and also how Canary Network's research and also more decentralized funding mechanisms can actually help you in making your investment decisions. So let's start with a simulation. So you have four choices, I guess. Your first choice is to buy an equally divided portfolio of ICOs as each asset starts trading. Your second option is to buy equivalent amounts of BTC and ETH. And your third option is to buy and hold an S&P 500 index, which, if you guys aren't finance people, is basically an index fund for the largest cap securities. So we're not counting pre-sale discounts here, which were pretty significant during these timescales. And basically we hold everything until April 1st, 2018. So I do care about survivorship bias, which is the bias you get when you look back and basically just pick the winner. So everything in this basket goes from 0x, which is a pretty well-regarded DEX project in Ethereum, to really just shitcoins. One was called E4Ro, and I was just looking at it. It was, well, I don't know if there's any E4Ro holders here, but oh, really? Oh, okay. I would. I looked at their material, and they were like, we're offering a poker service on Ethereum, but we're not a casino because casinos are illegal. Anyways, no one's using it. But so here's what we find. So if we conduct this strategy between quarters 1 and 2 in 2017 and hold until April 2018, then you would do roughly 14.5 times better than if you just held it in cash, roughly 13 times than S&P, and interestingly enough, around 3 times than you would have put in BTC and ETH. So let's look at something. Let's look at quarters 3 and 4 of 2017, which is when the ICO bubble. Well, I said bubble, but when ICOs really started to heat up. And so this is, so even in this period, it's still these buckets of this bucket of everything from great ICOs to terrible ICOs still did on average 2 to 2.5 times more than large coins like Bitcoin and Ethereum, even counting the epic rise of those currencies during that time. So what's the distribution look like? So ICO price distributions are very fat-tailed. So in my sample, 45% of ICOs actually performed worse than cash individually. But the rest did very well. And basically, this is a trend that you observe in venture capital, in angel investing, and I've basically tried to track down other papers that have done research on similar subjects, and they come up with results similar to mine. That basically most of your money is made on the things that do extremely well, even though let's say your average ICO isn't going to do well, you can still actually you can still beat the market in the long run. So is this trend robust? So as in, can we expect ICOs to do well in the future? Or basically, can we replicate the strategy if we actually did this? So there's liquidity risk, which is that ICOs have smaller network capitalizations and thus smaller trading volumes, and thus when you're trying to liquidate these investments, then the market will move their prices against you. But you can also adjust the size of investment depending on the size of race or project. And I also conducted a similar simulation with this. And if you adjust the price, if you adjust the size of your investment according to how big the fundraising round was, then you get similar results. Also, token lockups last up to 6 months, or in some cases even more. Some tokens don't release some token projects don't release their coins until much later. Also, survivorship bias. We've talked about this, but another thing is that I specifically chose 2017 Q3 to 4 just because that's when you see a lot of questionable ICOs, and also that April is just after the broader crypto market crash in March. So, all this data, I promise the rest of this will not be as data heavy, but investing in ICOs can make you do better than incumbents. So will this trend continue? So let's talk about why tokens are valuable. So there's there's two demands for tokens: speculative and fundamental. So on the speculative side, you're basically traders looking for short-term returns and also guessing how other people will value the network that token is native to. The other kind is fundamental value, which is you're thinking about your total token supply as the value of the network as an option on a network as it receives further usage, and also token races are a kind of debt that protocol designers owe to token holders for building the network. So why does it make sense to invest early in the fundraising process? So on one sense, on the speculative side, you're betting on liquidity increases. So a more fundamental demand for this is that if your token receives increased usage, then it would basically the price should reasonably increase. Also, the second thing is that asset prices can grow with liquidity and awareness, and with earlier projects, there's more room to grow. Some variants of these include exchange listings, where liquidity increases because more people are able to buy a coin. With some research we've done on basically Binance listings and tokens, we see short-term peaks due to exchange listings on big exchanges like Binance, and also also listing on these exchanges also confers legitimacy to the project. And also there's just hype and just more awareness for the project. The second reason for investing early is that, honestly, it feels like 1995 right now. It's everything's new and contested. There's no consensus. I was at Consensus for the New York conference a few weeks ago, and it just seemed to me there was no consensus around where blockchain tech would capture the most value. There was no consensus on how to actually value token prices, and that the market was pretty inefficient and everyone was trying to become a gatekeeper. But so this is the SF Bitcoin meetup, I guess. And if there are Bitcoin maximalists in the crowd, I guess my point would be a Bayesian point. So you could believe that Bitcoin or Bitcoin Cash will become the grand chain because of its long history and security and so on. But how much what possibility would you give to this stronghold continuing? What possibility would you give to Ethereum becoming the major DApp platform, even in face with a lot of governance changes and lots of protocol changes? Which DApps will actually achieve usage and beat their centralized competitors and decentralized? And so, if you just look at CoinMarketCap in 2016 and now, the major players in the top 20, some of them haven't changed, but still they're changing. And one of the coins that are fundraising today could actually turn out to be actually significant tomorrow. So incumbent coin advantage may not be that great. So also, how are ICOs different from equity fundraising? So one of the differences is there's nearer term liquidity. In venture capital or equity fundraising in general, you have higher investment minimums, and also it's hard to liquidate your preferred stock, and compared to that to basically ERC20 tokens, that basically fungible liquidation is a default. The second part of it is also that ICO fundraising is more globalized and it's easier to diversify your exposure or fund teams everywhere. And then there's also that there's also disadvantages to this in the sense that investors have weaker recourse, although we've seen much more legal enforcement action this year. And it also attracts speculative short-term investors to their communities, and also the legal environment is uncertain. But one of the things that ICOs do encourage is more decentralized angel investing. So let's do a comparison between VC firms and angel syndicates. So in terms of returns, VC firms, the top 5% of VC firms have amazing returns, but it's quite frequently observed in the research that the rest actually underperform the market. For angel syndicates, it's a really high variance, but the key difference between VCs and angel syndicates is that angel syndicates are more likely to take on one, earlier seed investments, and secondly, more idiosyncratic, or let's say, more diverse backgrounds in assessing projects. And so VC firms can have more prestige. They can have more proprietary deal flow. But because of their larger bets and more conservative policies, actually there has been research that angel syndicates actually they're not dupes, they do make money, and also provide more diverse signals. But then, so basically, it's, investing in ICOs, in my view, is going to take the more decentralized approach of more angel investors, more syndicates, more people having different opinions on where blockchain tech will converge. So, the key problem with angel investors is that you don't have as much time or manpower as a VC firm to look at your investments. And as Ray just mentioned, there are so many different altcoins that it's hard to read up, understand the speculative and fundamental demand of each project in order to decide what to invest in. So what Canary Network's trying to do is to solve information asymmetry, so that angel syndicates and some funds too. We've seen angel syndicates basically develop more fund-like structures and diversify their investments by looking at more of them through Canary Network and other research. So Canary Research has been running since January 2018. Our model is twofold. We get commissions from funds, syndicates, and investors, and also we're starting a subscription service for research reports, where you basically get our reportage on upcoming ICOs, good and bad. We have sample reports, so hit me up and I'll add you into the Telegram group where we have a good community going, and also sample reports. So what's our rubric? So our rubric is honestly pretty straightforward. It's first of all, we have a SWOT analysis, which is to people who aren't vampiric corporate people, our strengths, weaknesses, opportunities, and threats. So we have quote-unquote business, which doesn't make sense, which for platforms and dApps makes more sense in that how are you going to capture deal flow, how are you going to encourage people to build on your network, what kind of partnerships do you have, and for cryptocurrencies and platforms is more about incentive structure. How do you provide good incentives for miners, transaction makers, and also other governance parties. There's technology in the sense that there are trade-offs between decentralization and basically usability. We're looking at things that, for example, how secure is the platform, how different it is, what kind of value proposition does it offer in addition to the many cryptocurrencies nowadays, so on. For people, we're looking at the quality of the team, whether they have domain knowledge from other things or basically have built similar projects. We're looking at advisors and partners, and also the quality of the community. For risk, we look at basically regulatory and technological risk. For regulatory risk, basically, does this run the foul of, is this more likely for the SEC to go after, etc. On the technological risk part is, for example, if you're a dApp building on Neo, then basically the mechanisms, the increased block times or the consensus mechanism problems that Neo has also confers to your project. And lastly, we have token metrics, which is basically whether your token incentive structure makes sense. Do you need does a token actually hurt your use case, etc. We also do some analysis on the hype of the project and whether it's and its followers on social media and so on. So aside from that rubric, what we're really trying to do is basically identify flaws, risks, and potential in new coin offerings. So one example is Switch.io. For those who don't know, Switch.io is basically the first operational neo-decentralized exchange. And so when we first heard of the project, we thought that it was a pretty good idea because that basically a lot of neo-ICOs are hard to get except for exchanges like KuCoin. And basically that having an exchange for more liquidity for these coins is useful. We also identified and basically asked the team about a shortcoming for the decentralized parts of the NeoDEX because of the idiosyncrasies of the Neo protocol, consensus protocol, is actually block producers, which which people pay a lot of money to become, are actually able to see orders or transactions before the rest of the public, which makes for front running and manipulation. So we addressed this to the team, and basically in their plans they're adding a new token, new binary swap. Plans for binary swaps, so to change the security model around this attack vector. And so Switch.io has done pretty well, and Switch.io has a pretty nice UX, and basically it's we eventually went ahead and gave a positive rating. But this is an example of basically threats and risks in our research process. And the second part is to identify the coins that lose money. These include scams, lazy ideas, founders with unclear plans. But honestly, we're more afraid of teams that have unclear plans or basically have ambition in the wrong ways. Honestly, most of the honestly, I think a lot of people overestimate the number of projects that are totally money plays. We also interview teams and verify founders, and we prioritize projects with clear technical proposals and pay attention to what technical or business difference they have over existing projects, and we prioritize projects that already have working products. How much has been built and audited, and how much is just talk or unclear plans of building something new. So we also have vertical specific criteria. We have different criteria for example, sharding solutions, which have been the talk of the town lately. We have decentralized exchanges and also DApp platforms for more specific use cases. So where do we go from here? So we already are producing and selling reports on different ICOs. And for the future, for our subscription service, we're trying to implement a token curated market. So for when people put in subscriptions, the tokens they get basically some voting power into deciding which projects that we're going to research. And so by this, we both prioritize which projects to research, and also because all people can see what other people are voting, this also captures speculative signals in the crowd. For example, what tokens people are interested in. And our future ultimate plan is to generalize this even further. Instead of just covering crypto offerings, we want to build a peer-to-peer funding structure for research and content. So this includes equity research, but you can vote for what experts should research. This includes think about Stack Exchange or Quora, but you can pay people, or the Wall Street Journal, but you can pay writers to fact-check articles, and so on. And so that's the end of my talk. I hope you guys enjoyed it, and I'm happy to talk more about ICO funding and how the future looks like. Thank you.
I'm going to welcome Jay back up to the front here, and let's jump into our Q&A.
So here's a, make sure that's working. Oh, sure.
Testing.
All right. Why are you not Lindsay's?
Okay. So we have a question right here up front. Once Jay is ready, we'll go to that. And just raise your hand and get my attention, and I'll bring the mic to you one at a time.
Both awesome talks, super duper, thank you.
Oh, thank you.
Thanks.
I would love to just see if you could elaborate on the statement you made about NEO having a consensus algorithm problem.
Well, so
Can you repeat the question?
so it's about NEO. So basically, what I talked about to the Switch.io team was that there would be a chance that so block producers, I think they're called, what are they? I think bookkeeper nodes in NEO are actually are permissioned. They have to be approved by the NEO council or something like that, and then and so basically block producers there could front run because they get earlier access to the orders on any decentralized exchange that runs on basically like public broadcast of orders. So they have a chance of basically front running and manipulating the decentralized exchange markets before the general public can. But the thing is that the thing is why I'm still bullish in Switch.io and other NeoDex projects is that because basically liquidity is better than no liquidity in the sense that I think a lot of people are looking for ICOs that are going on Neo and that some of these projects are very interesting, and then that Switch.io has honestly the best UX of any decentralized exchange I've seen so far. So that's kind of my take.
Another question right here.
So one of the things that I look at when I invest, before I invest in an ICO, is the white paper, and I noticed that neither of you actually mentioned that in your presentation. So do you feel like the white paper is actually not important when assessing an ICO?
So I've had this question a lot because people love investing in ICOs because I think they see the massive potential returns that can be made on an ICO. And I just made a decision right out of the gate when I was looking at the market that there was a lot of ICO research and reviews being done already, and not a lot of people were looking at the more established coins and how to compare those. So at Renzi, we've decided not to enter the ICO research analysis rating space yet, although partnering with somebody like Canary in the future might be interesting. But when I personally invest in ICOs, I definitely read the white paper. I think it's hugely important to understand what the white paper says, what it communicates, is it well written, do you understand what the purpose of the token is? So yes, I think the white paper is the most important thing to look at when looking at an ICO from a personal investment standpoint. But at Renzi, we don't review ICOs yet.
Yeah, I very much agree. I think that the white paper basically comes in the business and technology parts of the Canary Network rating criteria. That we evaluate basically how they design the protocol of the network and also how incentives are established and basically their position on the trade-offs between, for example, decentralization and let's say throughput or something like that.
Hi, quick question. You guys mentioned ICOs, and one of the opportunities of ICOs is liquidity. for investors, right? Before that, you know, if they're called to be part of an angel group or part of a VC to be part of it. How do you think that the liquidity will be handled where in the States, the reason why it wasn't liquid was because it was only a certain group of investors who could invest in it. With an ICO and being traded on an exchange where you could be anonymous, how do you think that's going to fall into the financial regulations for the ICO? If I, let's say I'm a profit investor and I find an ICO that I trade on an exchange, how does the company, that people are creating with this coin, know that that new buyer is a qualified investor in the States? Because that can cause some trouble.
And I'm hearing on the live chat you're having trouble hearing the audience. You can repeat the question.
Okay. Yeah, sure. Okay, I'll give it a shot. So the question was around financial regulations of ICOs in the United States. The question was, when she looks at an ICO or when an investor looks at an ICO in the States, if it's treated like a security, you have to be an accredited investor to participate in most ICOs now. And so I've looked at a lot of different ICOs in the United States, and for the most part, you have to go through an extensive KYC process before you can invest in an ICO, and you have to prove that you are an accredited investor. Once that ICO has reached an exchange, usually the ICO period is now over, and it's been opened up to the public to now trade that token. The ICO is now done at that point. So I will say that almost every exchange these days, you cannot be an anonymous person on an exchange. Every exchange, if they are operating in compliance with financial regulations, also you have to go through proper KYC. You have to give them all of your information. You have to file taxes. They might even file tax information directly to the IRS regarding all the trades that you have made. There's very little anonymity when it comes to ICOs or trading on an exchange. So yeah, the U.S. is very, very strict when it comes to ICOs, and there's really no skirting those laws, and I think companies have wised up, and they either don't allow their ICO to U.S. investors, or they require their U.S. investors to go through proper KYC compliance.
First of all, thank you very much for the fantastic presentation. And my question is, what are the biggest differences that we're going to see in the next 6 months to 1 year in terms of ICO investing? And what is your overall outlook on the market in terms of liquidity and whatnot?
Yeah, so I think it's hard to
Can you guys hear the question?
The question? Okay, so the question was basically liquidity and activity of ICOs in the next 6 months. Honestly, my take is kind of that I think that there's so I think right now we're in a comparatively bearish period right now. Even though I still think a bunch of tokens are still pre-overvalued, and that we can see very obvious like institutional activity entering the fray. And so my sense is that basically it's sort of hard to I think it's pretty hard to price in the general how the general market will move. But then I've definitely seen basically some interesting projects built in the interim of basically like more mainstream people getting into crypto, starting to come into fundraising periods, and that I'm pretty bullish on some of them. The wave of entering institutional money should probably create a boom in terms of ICO and crypto activity.
Hi, it's a question to Jay specifically. I like what you're talking about the future, and I heard you said so basically Ethereum won over Bitcoin, right? So it looks like future is going to be more coins, right? So in this case, if, for example, I have an idea for a coin and considered all your like 10 subjects column in 2 and hypothetically speaking. So which platform you recommend to create this coin on, or maybe to start from zero ground? You know, I mean, it seems like Ethereum offering some good platform, right? So, I mean, I have a limited knowledge about it, literally, but I'm learning day by day. So, my question is to you, what would you recommend? Ethereum, or to go somewhere else, or to start from zero ground?
Okay. So the question was, if you're going to create a coin from scratch and you're going to try to hit, Renzi's kind of a perfect cryptocurrency mark, how would you go about doing that? And he was asking if Ethereum is the right platform to do that on. So I just want to clarify, definition-wise, what we are rating are cryptocurrency coins, meaning that we only look at coins that have their own blockchain. We are not actually rating and reviewing tokens yet that operate on a third-party blockchain. So there are a lot of different tokens and ICOs that have been created that operate on different blockchains, right? You've got Ethereum as one, you've got Arc as another, you've got Neo as another. There are different platforms that are launching tokens. We don't actually analyze and review those because we feel that the criteria that you would want to score a token on is very different than how you would score an actual coin. So the criteria that I spoke about earlier is very specific to a blockchain. If you were going to create a coin from scratch, almost everybody, hands down these days, forks from an existing project because it's open source. You can get a 2 or 3 year head start and say, okay, Monero is very close to what I think is kind of the perfect coin. I think they're doing these 2 or 3 things wrong. I think their team is, underperforming in this area, and I think that I can do this, X, Y, or Z better. So somebody would start with, let's say Monero as an example, they would fork that coin, and then they would make their modifications from there with their new team in place. But I think that you just have to find out which aspects of a cryptocurrency you find value in, and find the coin that best represents that value, and then fork from there. But it's a subjective question. But most people at this point fork from Bitcoin or fork from Ethereum. Those are popular coins to start with because they're very proven.
And also, in addition, there's also like putting tokens within, building tokens within these blockchains. For example, like ERC20 tokens, or let's say like Stellar tokens.
Thanks for a great presentation. My question is going to be about regulatory risks to tokens, new tokens or existing coins. Do you think there is a correlation between definition or upcoming correlation between definition of security, utility, and consensus algorithms those tokens are using? In a sense that if you're using proof of stake, internal mechanism for staking rather than proof of work for extrinsic value, such as electricity, would that be more defined as a security when you're using POS rather than POE?
I know this. Okay. So the question is around, do we have any thoughts about the regulatory space between the different consensus types and how a coin is going to be treated either as a security token or as a utility token? And I understand this question because there's coins that I've looked into very deeply where when you talk to the founders and the core teams, they make it very clear that the coins that you receive in exchange for staking your coins are not a dividend. They are not a dividend that is paid in exchange for owning a security, because if that was the case, the SEC would treat that coin very differently. And it would be like owning equity, if you will, in their venture, and you're getting dividends like a traditional stock would pay dividends. And they don't want to be treated like securities, because securities have a much different regulatory environment than a utility coin or utility token would be. A lot of it is I don't know, acrobatic word wrangling, if you will. So they're really trying to massage how they communicate the proof of stake, like you said, and even delegated proof of stake, DPoS, it's the same thing. Masternodes is the same thing. It's a funny story, but I actually had a call with a lawyer, and I've been on emails with lawyers over the last week trying to answer some of the same questions you just asked around masternodes, and whether or not, a master node and the dividends that it pays is treated more like security, or whether or not it's treated more like a utility token and a function of just operating the master node itself. Because a master node requires that you hold a bunch of coins in exchange for running the master node. So I think a lot of this is very unclear. And the response I've gotten from the attorneys and the lawyers is also this is very unclear, and it's going to take a while for the SEC and other regulatory bodies to understand the space and create regulation behind it. I don't know. I hope it becomes regulated, but in not such a way that it kills it. I think we do need regulation here. I think you need regulation for insurance purposes. I think you need regulation for liquidity purposes, for custodial purposes. I know that a lot of institutional money is not entering the space because the regulation is not there yet. So we need the regulation to get more money into the space.
I don't have a question, but you might want to look into the Howey test.
I'm sorry?
The Howey test?
Howey test? Okay.
And it's kind of dynamic too, because it depends on how much the developers are putting to work and then versus the community.
Right.
So the definition can change over time. I tell my guys, get the hell out of this country, basically.
Right. Right.
Just to put a disclaimer and say we're not to close U.S. investors.
Okay.
Domicile your ass in
yeah.
Cayman, Switzerland, Singapore, whatever.
So the comment, sorry.
The FD is horrible. Right. Anyways.
Agreed. He was just saying we should look into the Howey test and that he tells his guys to get out.
I'm not a lawyer, by the way, so don't kill me.
Neither am I.
Neither am I. The short version of the Howey test, as I've heard it, is if it quacks like a duck, it's a duck. If it looks like security, it's security no matter how they describe it. And there are 4 rules that kind of describe what security is.
Close? All right. My question is that do you have statistic data for the ICO in different countries and industries? I mean, like performance, the price of the total price, performance, something like that. Do you have that data?
Performance by country for ICOs.
Yeah. So the question was performance by country on ICOs. And so we have the data, haven't really looked at it yet, but then it's also complicated by the problem that there's some of these schemes are incorporated and managed and advertised in different areas. But basically, there's definitely different dynamics involved in the sense that Asian investors, for example, and American investors have different timescales for in which they judge returns, for example, and also just use different exchanges which are like legislated in each region. So haven't specifically looked into this yet, but yeah, interesting question.
How about industries? Did you compare industry?
Yeah, so for industries, it seems that the app platforms are doing pretty well right now.
Industry like travel or social media or gambling or something?
Gambling and healthcare as industries, ICOs there tend to underperform other industries.
Hi. So both of you seem to be using mostly public information that everybody has. Brian was mentioning, comparing to angels and VCs, and one thing that they have that other people don't is often the best VCs have deal flow, and they have private information that other people don't have. So my question is, are you guys trying to beat the market with public information, or just avoid the stinkers, or what are you trying to do with your ratings?
Great question. So what we're trying to do at Renzi is bring transparency to the marketplace so that people that are getting into cryptocurrencies have a way to actually compare apples to apples. So when I was looking at all of the existing services that were out there, I noticed that there was a ton of data, just lots and lots of data everywhere. You could go to blockchain info and you could go to these different sites, Coinmetrics, and see like, okay, here's all of these numbers, but there was no way for your typical investor to break those numbers down into anything meaningful. And so at Renzi, we were really trying to figure out, like, can we score these and rate these and compare these so somebody can actually look and say, okay, here's what these numbers mean and how they compare from one cryptocurrency to the next. That was really our goal. As far as like public information versus kind of proprietary or our own research, there's two things that we do. One is we actually do dig in pretty deeply into the blockchain to try to get metrics out of the blockchain that people have not gotten before. So an example of that would be Gini coefficients. You know, like you could not find a website out there that will tell you the Gini coefficient or the dispersion or distribution of nodes by country or mining for any of the top 50 coins other than maybe Bitcoin and Ethereum, because there's been one article written about it, right? But we're trying to actually discover and find that information out. The other thing that we do is we actually contact the community and the core team the second our review goes up or even prior to it going up. We do a community outreach program. We say, look guys, we've done a review of your coin already. We would love to get your feedback. And we have a whole form that they can fill out that says, you know, here's the 10 things we're rating you on, here's the information we found, and here's our sources. What do you think? Are the sources accurate? Are the numbers accurate? Are the scores accurate? And we've gotten contacts and replies from the core team members, sometimes the founder himself, who say like, here's where your data is wrong, here's some updated stuff, here's a source page you didn't find. And so we're really trying to bring all the source information together to get our information as accurate as possible. And I think we're just putting in one easy to find location that before was spread out, you know, across 20 or 30 different websites that was hard to use. So
yeah, pretty similar. I think basically the first point would be that like by looking more deeply into both the protocol and if code if public. Of these new token offerings that you're kind of digging deeper than the average syndicate investor and basically like providing manpower in some sense, and also in another sense we're also talking to founders a lot more now, kind of asking them about specific threat models, for instance the one I mentioned, about their projects and also. That basically, I think that the public, we're also kind of trying to look into even earlier, like seed round level investments, so that we can basically we can provide more information that even if public, that like a lot of syndicate investors would not have been able to receive otherwise. So. Yes, like most of the information we act on is public, but then we dig deeper and talk to founders.
You got a question? So a lot of projects do and don't have timelines. So how do you weigh timelines when you're doing your consideration? Because some companies don't use them at all, some of them give you everything for the next year or two, like what developments you're going to make. So how do you weigh that when you're making your considerations?
Yeah, it's a good question as well. We call a product roadmap, and we look at whether or not there is a publicly available product roadmap. We also reach out to the team and see if there is a roadmap that they can provide us that maybe is not publicly available. And sometimes you can find their roadmap just by reading a bunch of articles by the founder who will talk to, like, here's what we're working on, here's when we plan on finishing it. It may not be formulated as a public roadmap, but we do a lot of digging to try and find out what are they working on, when do they plan on having it finished. Let's see, was that the extent of your question? I can't remember.
Basically.
Yeah. So I was going to say more of something of that, but I can't remember what it was. So
how do you weigh it?
Oh yeah. How do you weigh it? Right. So if it's not publicly available, then we ding them on the score for sure. We try to look at, is it publicly available? Are they hitting their milestones? And that's pretty much it. So yeah.
Similar to that, but I think. A very large majority of the projects we rate do have roadmaps, and our concern is basically whether the roadmaps are overly ambitious and can they actually deliver, which we then sort of kind of rate against how much progress they already have public, and also by talking to the team, basically.
Sorry, one more thing I was going to add to that comment as well is, when we do our scores, it's always based upon today's metrics and today's team, today's GitHub activity, today's everything. So a lot of times you'll read an article that says this coin is going to do 100,000 transactions per second. They're going to do it, right? But they're not doing it today, right? So there's a lot of boasting about what different blockchains will be capable of in the future, and we say, great, when you get there, we'll increase your score or we'll adjust accordingly. But we always rate them according to what their performance is today and what their metrics are today. So the roadmap is interesting, but it's not that interesting to us because all we care about is what is the current performance metrics of today.
Definitely agree, and also we've seen a bunch of projects basically advertise really high transaction numbers that, upon more quizzing, just say it's mostly marketing or like projected long into the future.
This is going to be the final question, but all the speakers will be around afterwards, so you can always go ahead and walk up to the top to the net. So my question is kind of, we're very early in the blockchain, and I think we're finally delving into the opportunity to understand that there's a difference between Bitcoin and blockchain, and I think there's still there's this connection that there's non-blockchain chains out there. And so my question is, how do you compare and contrast those like DAGs or ladder structure projects in comparison to a blockchain or something like that? And do you ultimately see them serving as the same type of process or different type of processes?
Yeah, so we've looked at some of the DAG coins that we've already looked at. We've looked at IOTA, we've looked at Nano. I think those are the two big names out there in the DAG space right now. What's that? Hashgraph, right. We have not looked at that. So when we look at a coin, we try to look at the utility and usefulness of the coin, regardless of the underlying technology. I think that there are elements where a DAG scores much better, typically speed and fees. They're extremely fast and they're extremely cheap, so they score really well on that scale, on those categories. Other things they may not score as well on are things like network decentralization. If they don't have a very well fleshed out blockchain that is global with nodes all over the place. We've also found that DAGs actually speed-wise were not performing very well because they weren't built out yet, and the performance of the DAG depends upon the fact that you've got a lot of different nodes. So we try to actually score them pretty apples to apples on our 10 different categories because ultimately they're trying to serve the same purpose, right? Like whether or not it's a blockchain or whether or not it's a DAG, they're still trying to serve the purpose of the ability of sending and receiving coins or value from point A to point B and the ability to store value, right? So some of them are more focused on payment systems, and so they're focused on being cheap and fast. But ultimately, I think that a DAG can be scored on the same criteria as a traditional blockchain.
I think that pretty much covers it. And also the other thing that I might add is I haven't looked extensively at, we haven't researched Hashgraph extensively yet, but then there's interesting stuff coming out by, I think, like Olajing, that's combining a DAG-like structure with basically with different chains that run specific DApps, and that I think in terms of providing transactions and building distributed applications, we sort of analyze DAGs as in the same category as other like blockchain assets and so on.
Yeah, and I'll just add to that what we found honestly is that what we're doing is not easy. Like if what we were doing was simple, there'd be a lot of people doing what we're doing. But when you look at the consensus types and you realize that like, okay, we've got proof of work, we've got proof of stake, we've got delegated proof of stake, we've got master nodes, and they all kind of do things differently when it comes to consensus, right? And then you've got different coins that send and receive differently with different types of confirmations and number of confirmations. And so we actually have to look at like each one of these different coins and how they behave and write different scripts and different code to get the metrics that we're after in a different way. So we do find coins that all fall under the same category, and we're able to apply the same scripts to those to gather the data because they're all very similar consensus types or different similar coins that fork from the same parent. But if it's a totally different coin with a totally different underlying consensus type, then it requires us to do a lot of additional research from scratch. And it's difficult. It's a very time-consuming process to rate these coins. That's why we only have 25 on our site. Whereas most rating sites, they have like 1,000 already, but they're just grabbing like metrics that are very publicly scrapable, right? We're not doing that. We're really trying to dig deep and get interesting metrics. So.
Yeah, definitely. There's sites like ICO Data, no, ICO Data is actually very good. ICO rating and etc. Are basically kind of like regurgitating or not actually providing like that like specific analysis on different projects, and I think both of us are trying to change that basically.
One more thing, Travis, where you cut me off, is If there are coins that you want us to research and review, we have a listing application on our site where you can request different coins. That'll kind of bump it up in the priority based upon how many people request it. And we also have a feedback form for the public. If you go to our site and you see a rating or analysis or a score that you think is way off, leave us some comments. Leave us some sources and say, this is why you guys are way off on this one. And we look at all that feedback and we're very open to it. So, no. We have no business model yet on our website, but eventually we will charge for more premium reports, similar to what Canary Network does. But right now, all of our information is publicly available without a paywall. Eventually, there will be more of a premium service.
And similar to we have a Telegram channel in which you can see several sample reports, and we're also building a subscription service and basically receiving commissions from funds and syndicates.
I would definitely agree with Jay that this is definitely not easy what you're both doing. So please, big round of applause for Jay and John and answering questions. That pretty much wraps it up. Thank you everybody so much for coming out. We're going to be putting some fresh beer out on the ice soon, and you're welcome to hang out for a while. We just try to get everybody out here before then. Thanks for coming out.
I actually disagree on both.
Oh, I do. A lot of people do.
Great job.
I think I closed my eyes a bit too much.
All good.
Oh.